Welcome back. Deposits into UAE banks rose by 7.1% for the first quarter of the year, while lending rose 0.3%, according to data released by the UAE's central bank. The figures show that bank deposits of the country's 51 banks rose by 3.3% to 1.2 trillion month-on-month in March. Total bank deposits increased by 3.3% to close at 1.2 trillion dirhams, while loans rose at 0.2% to 1.1 trillion dirhams. The UAE healthcare sector has been forecast to grow from its current $3.2 billion to $11.9 billion by 2015 and will be driven by long-term investments. For the GCC, the healthcare sector has also been forecast to rise to 161 billion dirhams by 2015, growing 11% year-on-year. Initiatives introduced by Dubai, such as the setting up of free zones like the $3 billion Dubai Healthcare City and $400 million Dubai-Tech, have helped in attracting leading medical research institutes, pharmaceutical companies and biotech companies into the Emirate. Another example of the UAE's long-term investment commitment is the Saudi-German hospital, where officials believe that in turn the huge forecast for the region will entice more medical professionals into the UAE.
The UAE healthcare sector is one of the most dynamic areas among all, and it's growing swiftly. Many reports, one of them is coming from the Dubai Chamber of Commerce, is showing that the healthcare sector currently accounts for 6% of Dubai non-oil gross domestic product. Other researches are showing that also the healthcare is growing from its current $3.2 billion in the UAE to around $12 billion by the year 2015, which is a massive growth if we are looking into this short span of time. The reflection of that would be, of course, in areas like health tourism, wherein 15% increase is achieved every year in the UAE healthcare tourism. And now Dubai and UAE are being listed among the most recognized destination for health tourism at the moment.
Dubai Investments posted a 6.3% rise in the first quarter net profits this year of 107.5 million dirhams, up from 101.1 made for Q1 in 2011. With that, let's now look at the stock indices across the GCC. Equity markets and higher yielding currencies all sold off in trading last week as the political developments from Greece overshadowed risk sentiments. So with a stacked economic calendar in the week ahead, we spoke with Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East.
Well, equity markets and currency markets were hammered lower in trading last week as the uncertainty from the Greek political situation weighed heavily on risk sentiments. And as a result, we saw the risk-off trade dominating in trading last week. We did see the New Democracy, the POSAC and the Syriza governments all failing in their bids to form a new coalition government, and this has weighed very, very heavily on risk sentiments. And as a result, we've seen the euro closing below 130 against the US dollar, and we've seen the euro GBP flirt around those 0.800 levels. We expect more downsides in the euro crosses this week. Along with tracking the political developments, we have a host of growth data coming from the Eurozone. Earlier in the day today, we saw the Eurozone industrial production figure contract to minus 2.2%. Tomorrow, we will be awaiting the German, French, and EU GDP readings, all three expected to be lower and showing weakness in the euro crosses. And finally, on Wednesday, we have the forward-looking ZUI sentiment for business survey, and that will also expected to weaken as the overshadows of the Greek political situation will continue to weigh down markets. Finally, we look at Wednesday's FOMC meeting minutes from the US as well as the Bank of England's inflation report on Wednesday to get a feeling of how the QE voting was with regards to those respective boards. That could bring a lot of volatility in the markets. And amongst this busy economic calendar, we continue to watch how the European bond auctions go. Higher yields will continue to weigh down European sentiments.